Today, I want to talk about how trillions of fake synthetic shares have been created over the last few years in the OTC markets, not just specifically for AMC, but for every stock in the wider stock market, which is really interesting considering that Citadel is actually exempt from pretty much every single regulation. But surely it can't be them creating all of these synthetics, right? Well, stay tuned and let's make some money. And now I'll dive straight in with the key information. So, Nation Vibes tweeted saying this is the number of shares traded in the OTC market in the last 5 years. Just look at the deviation in 2021. It was almost 5 times the yearly average. How many counterfeit shares were introduced with the increase in demand due to the meme stock mania? We can see this chart gives the data for 2018 and 2019 pre-pandemic, but also 2020, 2021 and last year 2022. So this chart splits down the over-the-counter trading into alternative trading systems and into non-alternative trading systems. Now this gets a little bit confusing, so I want to explain what each kind of system actually is. First, you have on-exchange trading, and then you have off-exchange trading as well. And that off-exchange trading breaks down into alternative trading systems and non-ATSs. This extract from the SEC says that press articles and academic research dealing with over-the-counter trading tends to focus on alternative trading systems rather than the larger share of off-exchange trading that occurs outside of those ATSs. So you basically have these alternative trading systems like the dark pools and Citadel Connect and other forms of trading system, and then you have completely over the counter, over the telephone or over email trading as well. Obviously it's that over the counter, over the telephone or over email trading which is where the really sketchy deals happen. Now for alternative trading systems, in 2018 there was 30 billion shares traded. That increased slightly in 2019 to 45 billion, increased again in 2020 to 112 billion, but increased massively in 2021 up to nearly 500 billion shares. That then dropped significantly in 2022 back down to only around 83 billion. And again, in those non-ATSs, those non-alternative trading systems or directly over the phone, it was 1.5 trillion shares in 2018, 1.4 trillion in 2019. It did increase to 2.8 trillion in 2020, but skyrocketed to 9.8 trillion shares in 2021, and then back down to only 2.2 trillion in 2022. Now remember, this is only counting the over-the-counter trading. It's not counting the on-exchange trading where our trades sometimes go but not always go. This is purely the over-the-counter trading, which is likely where these synthetics are actually created. And any guesses as to where the majority of synthetics were actually created over the last 5 years? Obviously, it's in 2021. And if you add up the total over-the-counter trading for 2021, it's nearly 10 trillion shares that were traded in total. Now with 5 times the normal trading volume, I can only imagine how many of these trades or how many of these shares that were traded actually resulted in the creation of synthetic shares. As I said, this data isn't just for AMC, it's for AMC, GameStop, Bed Bath & Beyond, all of the other meme stocks, but also all of the stocks in the entire stock market. But I wonder if the portion of AMC shares that were traded in say 2019 versus 2021 as a portion of the overall total was larger as well. It wouldn't surprise me if there's not just 2 or 3 billion synthetic shares that were created, but actually many multiples of that could have actually been created. And as Copy and Paste tweeted, he said there's likely more counterfeits than there is real shares on thousands of securities. It's likely not just AMC and GameStop that are flooded with these synthetics, it's likely the majority of smaller stocks in the wider stock market. But the attention is only driven to AMC, GameStop and other meme stocks, and that's the stocks these hedge funds are working so hard to push the price down on. As Jan-Jack tweeted, he said more than 900 disparaging articles have been written about AMC in the last 365 days alone across the mainstream financial media. AMC has not only been covered every single day, but AMC has been covered multiple times per day, at least 2 to 3 times, by Wall Street propagandists who insist on telling shareholders to sell their AMC shares. AMC has remained in the news media cycle longer than Tesla and Apple combined. And here's a screenshot of just a few of those articles that have been produced over the last year that clearly short and distort both AMC and GameStop. Articles telling you not to buy the dip on GameStop, telling you that short sellers are making a comeback, and telling you to sell your AMC and GameStop shares. Not only has this FUD and shill campaign impacted the mainstream media, but it's also infiltrated the AMC 8 movement directly. This post says if you are ever in doubt that the relentless post telling you to sell your shares before it's too late, or begging you to sell your AMC shares before the reverse split were from FUD bots, then these multiple lawsuits to delay the split should be enough evidence to convince you otherwise. Why in the world would hedge funds want to delay the reverse split and beg you to sell your shares before the reverse split happens, especially when they claim the stock price will fall back down faster than it's ever happened before? And he said it's likely because it's all a lie and they want to convince you that AMC is dead and that you must sell your shares right now before the reverse split. But on the contrary, AMC is not dead. AMC is experiencing record ticket sales because the box office is setting new highs. There's AMC product in the stores, the concession sales are solid, the AMC new credit card, and the fact that AMC will soon become profitable. These are all positive things that move AMC out of debt and on the way to profitability. And to try and stop this FUD campaign, InvestorTurf has done exactly what I wanted and has actually created a petition to ban Citadel securities. This petition to ban Citadel and investigate Ken Griffin for fraud has already received over 4,200 signatures in under 24 hours. If you haven't already, I do think that signing this petition is a great idea because as we get more and more signatures, the petition is likely to be picked up by the local news, by the mainstream media, and ultimately make its way to Congress. Because so far, even though white-collar crime needs to be addressed with jail time, it's currently only addressed with small fines. This user tweeted saying, if I know guaranteed that I will make $30 million in gains, but have to pay a $2 million fine, I'm going to take those $30 million of gains with a slap on the wrist every single time. These hedge funds and market makers know they can make money hand over fist, making millions, tens of millions, hundreds of millions, and billions of dollars, and only pay small speed ticket speeding bump fines. Obviously, this doesn't discourage them from committing illegal crimes, and if anything, it actually encourages them to commit these crimes because they know they will get away with it. And speaking of getting away with it, Citadel files for an exemption from following pretty much every single rule in the Investment Company Act of 1940, and somehow every single year it's instantly granted. Citadel is exempt from every single SEC rule except for SEC Rule 9 and SEC Rules 36 through 53. It's interesting that SEC Rule 34, which Citadel is exempt from, covers destruction and falsification of documents. This allows Citadel to willfully destroy, mutilate or alter or omit to state therein any fact necessary in order to prevent the statements made therein from being materially misleading. In other words, Citadel is allowed to destroy incriminating documents, alter them or lie outright in their filings, even if it's misleading to investors. And as I said, that is ultimately why we need to sign this petition to have Citadel removed from the overall stock market, as they're exempt from pretty much every single regulation. But what is interesting is this is all happening at a time when the Fed is telling us and assuring us that a soft landing is guaranteed, just like they were doing in late 2007 and early 2008. They're saying, don't worry guys, the US economy is still on track for a soft landing, just like we were back in 2008. But obviously at the same time, companies are having their credit rating cut to junk at the fastest pace since 2020 and 2008. These companies are slipping into an earnings recession and the US is already in a recession. The only thing that needs to follow and to crash is the wider stock market. And obviously when this next leg down in the market crash happens, AMC and GameStop will end up squeezing as a result. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.